Hey everyone, today I thought I'd do a quick update as to where the market is going based on our economic conditions. So, very quickly, as you can see here, let's go to our GDP first, where we're sitting. So, as you can see, based on the current situation since 2013, we are sitting a healthy GDP growth at the moment, so we are in no way negative, and I don't think it's heading that way. So that's a good indication that we are not heading into recession as such, like some of the economics say that we are heading towards possibly a recession. So that is completely incorrect. And if you're looking at the data for the long term, for the last 25 years, Australia has been quite stable, except for that period around the 2018, 19, I think, where we had that contraction. So overall, our economy is quite resilient to what's going on in the global market, and we shouldn't have any issues. So the next thing you got to look at is the labor market. I look at the minimum wages. Our wages are on the way, it's up, so everyone's getting paid their money. It's not going backwards, so that's going in line with the inflation. However, there is a downside to the wages. The higher the wages go, which means that there's more money people can spend. So it's kind of like a double-edged sword where if you're earning more money, you're spending more, and you'll be pushing up the inflations. But at the same time, it is keeping money in everyone's pocket where they have the means to survive and keep the economy going as well. So it's both give and take, I guess. So I'll leave the opinion to you on this, as I'm not an economist to advise on that, and everyone's got their own opinion. So the other one I look at is the where is it? Minimum wages. Unemployment rate. This is a big factor. So for the Reserve Bank to determine the rates, they need to look at the employment rates. Obviously, during the COVID time, let me just go to a 5-year chart. As you can see, during COVID time, our employment skyrocketed, and it's a downward trend since then. So we're sitting on about the 3.5, under 4% mark, which is quite healthy. And Reserve Bank's obviously looking at that quite closely. The higher the unemployment rate is where we're heading towards a economic crisis or recession as such, and that's what's going to stop them putting the rate on hold. But at the moment, this going hand in hand with the inflation rate itself as well as to where we're sitting. But we are in a healthy market that we don't need to worry about too much. So I don't think we'll hit above anywhere close to 4% where we're going at the moment. And yeah, it's been the lowest since it's ever been with our unemployment rate since 2019. So let's have a look at the 10-year chart where we're sitting. So again, 2014 to 2023, we're sitting at the lowest it's ever been. So our economy is quite healthy at the moment. What people talking about media, it's just garbage up there. I don't believe any of it. As you can see, the stat tells you everything here. Now, the other thing I need to have a look at is inflation rate as to where we sit at the moment. So currently we're probably sitting around the 7%. As you can see, with the rising interest rate, reduction in interest rates, our inflation did increase over time. And that's what I call the COVID tax, and that's what's causing it. So at the moment, we'll probably hit the peak around 8%, and it's on its way down. Now, where are we sitting at the moment? So currently we're sitting at 7%. So I'm guessing the next quarter will probably come down further. And if you haven't looked at the inflation chart, this is what's worrying the Reserve Bank, where if we go above more than 8%, we're going to have issues. And that's why they keep on bumping up the rates and rates, because our inflation from here onwards just skyrocketed from 4% to about 8%, which is why they had the 10th, 11th consecutive interest rate rises. However, this is on its way down. That's why they paused the rates in April. And in May, they had another increase. However, they need to look at that with an unemployment rate. It depends on how sustainable it is. At the moment, the inflation trend is on its way down, which is a good start. And we can probably see the worst is over. The next one I will go to, and this is more of a property thing. Is it under money? Okay, interest rate. Where are we sitting at the moment? So currently our interest rate sits at 3.6% after all the rate increases. As to what might happen next month, 50-50 is my opinion. We might have another rate increase, and that's probably going to be it based on all the inflation stats, strong, healthy economy, where we're heading. So, and they don't want to put the interest rate too high because that's going to create too much issues and too much budget strains on everyone. And we've got no choice but to increase further wages, which is probably not going to happen. So, if you're looking at this, if you ask my personal opinion, I say we have probably peaked at the market. But however, who knows what RBAs are doing these days. And if you're having a look at it, this is based on stats since 2000. We had much higher interest rate than this, and the property market has not dropped since then. It's been up and down, and every 10 years, the property market's double. So it shows how resilient our property market is in comparison with the interest rate. So in fact, where we had it from 2020 and downwards, that's due to COVID. That's abnormal for it to get close to 0%. Where we should be with the interest rates, probably somewhere where it sits now at the moment, and that should be probably the healthy, normal interest rate going forward. Somewhere in that region based on the past. If we go to 25 years, as you can see the stats, we are actually at the lowest point ever. So whatever media is telling you, price is going to drop 30-40% and so on, based on the stats in the past and rising interest rate, it's just not going to happen. And I think people realize that now. So the other one we need to have a look at is there's one looking, I'm trying to find it for you guys. Okay, so this is the one where it's probably the most important, average housing prices where we sit at the moment. So as you can see, this is the national average housing prices. It's gone up and up and up, and then now it's on its way downwards. So if you're looking at the 10-year chart, that's where we sit at the moment. Is a property price going to fall any further? Depends on the interest rate. I think the interest rate have peaked at the moment, and the other thing contributing factor towards the housing prices won't drop anymore is because our borders are now open and government's encouraging migrations to come in. So we have 400,000 migrants coming every year. The question remains as to where we're putting those migrants. They all need properties to live in. So with the shortage rental crisis that we experience at the moment, with most cities hitting less than 1% as a rental vacancy, this is going to make the situation worse, and it's going to bring back the investors into the market because with the high increasing rents, they do see the opportunity there. So I don't think we're going to head towards any drop any further anytime soon based on the stats here, but I guess only time will tell. Now, if you're having a look at the other things, the number of building permits. So as you can see, and this is again related to housing crisis, as you can see during the COVID time, the government's put out the incentives. That's what led to that massive rise with building approvals. And then it's kind of dropped off because with the material prices and everything increasing, rising interest rates, it's putting a lot of builders off and a lot of them are going bankrupt. So consequently, all the building approvals are going down. Same with the renovations and everything else as well. It's come down as well with the increased interest rate and increase in material costs. So that's where we sit currently. For us to take into consideration with the increasing migration, fix up the housing shortage, where we need to be, we need the building approval to go right up there. So I guess with the building crisis and where it's happening at the moment, I don't see the government have any short-term fix, and this is probably going to continue for the 3-5 years, depending on how the stats here. The other thing you need to have a look at is the home loans. Let's have a look at the home loans as to where we sit at the moment. So this is based on owner-occupier home loans. If you're talking about where we are heading towards a recession, where the price is slowing down and so on, have a look at the stats. the stat doesn't lie. Since April 2022, with the rising interest rate, yes, all the loan approvals have gone down since January. However, that's February and March. The loan approvals have gone back up again. And there is probably 1 or 2 months time lag in here as well due to settlement with the loans and so on. So realistically, what we're looking at this data, March, you're probably looking at February as a realistic data. Now, we know that the housing prices have increased since February in most cities and in the positive territory rather than the negative in the greens. And I'll show you that later. So this is only go back up, and that's another stat to indication as to where we're going with the funding and where the housing market is. The other thing, let's have a look at investing lending. How are the investors thinking the current market? So same thing, it's dropped off from April to October, and then January it's coming back up as well. So again, investors' confidence are coming back in the market, and they are back. So if we look at, let's say, 5-year status, for example, as an investor, as you can see, 2022, it picked up here. Now we're on the correction phase where it's going back up. So in fact, the best time to buy is probably November last year, but it's never too late to buy now. So November data are reflected probably in January, which is here. And this is where it sits at the moment, as the data is only up to about March. So as you can see with that time lag, it's coming through. And I'm not surprised in 2 months' time when we revisit this, we're going to be up here somewhere. So all the signs, indications are we are heading towards the right way with the market itself, with the housings, and we have bottomed out. That's my personal opinion anyway. So this is pretty much it, all the recapping this. I just want to show you a few other things when I bring up the slides. Give me 1 second. My articles, I just need to find it for you. This is the national housing market. As you can see, that's the latest one as of May. As you can see, the houses prices actually have gone up, same with apartments, with the data suggested. So there is another one I can show you. This is the national house prices for the month of May, the latest one, according to SQM. As you can see, most of the properties for houses are actually in the greens, except for Hobart. So the market is back and it's rebounding. It's in its correction phase for the last few months. Same thing with units. As you have a look at Sydney's come back up. Melbourne's the only one that's in contraction. I'm assuming that's because where most of the apartments are in the CBD and it's oversaturated. Darwin, don't know too much about the market, so I'm not going to comment on it. Brisbane, Adelaide, Perth, Hobart. So everything's pretty much in the positive at the moment. So the markets are heading towards the right way. Here's another stat of houses and units in terms of rental breakdowns for April. So as you can see, the latest stat for the year, Sydney had a 22% increase and 29% in units for the year. Brisbane, Melbourne, they all followed a similar trends. Adelaide's the same, Perth. So most of the houses and units are in the upward trend, increasing. And the reason why the prices have increased is this is to bring in line with the interest rate rise. So as I said, the interest rate probably have bottomed out or very close to it, if my prediction is correct. And what's going to happen, all the investors are coming right now into the market and they're realizing that we pretty much have bottomed out, well, the smart ones anyway. And they are pretty much investing all their money left, right, and center. And that's why I'm showing you that chart before with the bank lendings, the investors are coming back. Now, the other thing with this is if you do capitalize now, you buy the market with where it's going at the moment. When the interest rate drops, you are actually going to see a increase in your rental yields because rental crisis, this is not a short-term fix, as I've indicated before. Until the building approvals up and the constructions are going back up, we're in nowhere to fix this housing crisis. And at the moment, the government's not doing too much about it. Unfortunately, this is the way it is. And no one has a solution, and I don't have a crystal ball. I think this will continue for the next 3 to 5 years, but I'll let you decide as to where this is going. This is my personal opinion anyway. The other thing I want to show you is the national vacancy rate. So as you can see, April 2021 to April 2022, we're all sitting at 1%. And as you can see here, most capital cities are sitting less than 1%, or the worst is Canberra, sitting at 2%. So we are definitely in some housing shortage crisis. Anything under 3% will be pretty much classified as being housing shortage. 2% pretty much critical. So, and I want to show you one more where, if I can find it. This is the national vacancy rate nationwide stats, April 21, 22, and 23. As you can see, the number of vacancies have almost halved. Hence why it's leading to that stats of 1 to 2% vacancy rate, with some cities less than 1%. And why is it a good time to buy now? Many of the markets are still less competitive than before compared to the COVID time. Everyone's yet to come to the reality because of media, what they say. I never listen to the media anyway, so I buy with what the stat says and based on the market itself. So now's the time to get in there. You still have the ability to buy at a lower price. It all comes down to supply and demand. So the issue we're facing at the moment is that demand is high and supply is low. So that's what's leading to increasing housing prices. However, there are still pockets where you can still get a reasonable price. Vacancies are still low at the moment. Rents are rising, so that's encouraging investors to come back into the market, and shortages everywhere in real estate, which I touched on already. Why the prices will go up further? So like I've gone through within the charts, economies are quite strong at the moment. Unemployment's low. Rates are very low. And our real estate market's quite resilient. As you can see from the past chart I've explained, we're pretty much a real estate of its own. With the borders opening, migrant students coming in, 400,000 people, where are we putting them? So that's all the increasing all the factors that's leading to increase in prices. And the government, of course, they're increasing migrant intakes to fix up our labour shortage, and lack of supplies, vacancies are low. So all these are clear indicators that our prices are not going to drop in the property prices unless the rates go super high. But based on the charts, everything seems to be positive and indicating that it's going down. So we are heading towards the correction phase at the moment is what I call. So if you're looking at the property clock, have we bottomed out? I reckon we're sitting at somewhere. We're past the 6 o'clock on the property clock, which is the right bottom. So we are sitting between 6 to 9 o'clock at the moment, depending on what cities you're looking at. We are in that correction phase at the moment. So 6 o'clock probably been November last year. Right now, we're probably looking at I'll say 7 or 8 o'clock. But you still have probably a window of 6 months to buy your property before the rates drop. That's my forecast anyway. Thanks for watching this. Just let you know that this is only my personal opinion, so it's general advice only. I recommend you to seek your own advice, financial advice, taxation advice, and so on. Do not take on my advice, as this is general only. Thank you.